Good morning, everyone. It's 17th January 2017, and welcome to another episode of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All systems, indicators, strategies shown here are for education purpose only. All levels discussed here are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any investment or trade decision based on anything that is discussed here. We will not be responsible for any resulting profits or losses. So let's have a look at what Nifty did. A very clean open below the point of control of previous day and instantly got sold off. A failed auction below the low of Thursday. So again, now a debatable issue. There was a failed auction of the IB on Thursday and it's revisited, but now it has not stretched to 280R from this point, and also the revisit was unknown. And these things keep on happening, and that's the reason that the better trade location would be to identify a range. Like this one is a range. Suppose this was a range. When we if we split this, you can see a trading range was established. It breaks below that trading range, gets back into the range, more likely that it will do the entire range. So these tails needs to be not counted within that range, because not necessary that it will go there. But on the other hand, there are various nuances working all together. So this tail on Friday was emotional. So that gives us a possibility of the tail revisit. Blended with this auction failure below the range gives us a possibility that first it will clear this range and then later on maybe move to the edge of the tail. Now during the live trading hours, we were discussing that till this is protected, like this, I would calculate this tail and 50% of that, till that is protected and not creating value above, there are all chances that this might still like go and look below that, what is below this range, because these failures need to be marked on the chart and taken as references, not that it will guide the trend or it will dictate the trend. So post that failure, breakout from the range in the C period. Again, the range got compressed. Inside bar in the E period, but fails to break down below the D period low. So again, a nice compression, a nice balance. Again, a breakout in H period, and then the entire part of the day just created value higher. Now, if you see a very distorted profile, day time frame in control, anomalies everywhere, this, and this. So expect a repair in coming days. Now, not necessary that it will happen today, but expect a repair in coming days. Let's have a look at the 1 minute chart. Open and a drive down, a nice balance in the first hour, breaks above the balance, and then a elongated profile turns out to be short covering. If you see this, a nice range happening. So when this happened, we were looking at the IB statistics, and this demand has become supply. So suppose at this first failure, my expectation was that it will hit the IB high, which did not happen. And I was able to book the 50% at this touch, but the 50% I had to scratch when it started breaking out here. Now, when it went here again, I was not confident enough to buy, and finally, at this 8044 touch, I was able to sell it again, and then just booked at the end of the day, because we didn't get a bigger rotation. 16 points initially came, but we didn't get a bigger rotation. So overall, congestion in two zones, making a nice balance. And if you can see, the order flow was almost positive entire day, with a bit of selling. Now this selling can be the intraday orders getting squared off, so can be profit booking till we don't get a follow up tomorrow. Also, if you see this, the first spike and then no supply. So when a spike happens in a wide range bar and it retraces back 50% and there is no supply, it's a sign that there is no consensus in lower prices. So two no supply bars initially after a no demand. So when this was trying to push up, no demand, that no demand high breaks, again comes back down with no supply. When there is no supply in this zone, generally what will happen, they are just waiting for someone to buy and trigger the orders and go higher. On the 15-minute, as usual, we have sellers coming down at the edges and getting stuck. Again, rotation. So here, if you see from this pick, you can make out that suppose if this was the stem of the P and then a P shaping up like this. So short covering, and then so this reference becomes a weak reference, and expect that when it comes and touches this would clarify that the market does not have any interest in these prices, in lower prices than this. Now let's have a look at the Renko. So here, as we were talking about the rule-based approach for volume profiling, what I would like to do is extend this micro composite from year to year to this point of control is outside, though the range is there. So anyone following range-based technique can use it, but I would like just take it to, I would take it till here. See, shift it. So very Gaussian balance on volume here. So it gathered all the thrust required to push up in this zone, and if you can see, balance below this point of control, the micro composite point of control, and then pushes up, comes back to check that, and then makes its way higher. Now when it goes higher again, if you see, there is nothing in this zone, so creates a nice balance here and then again breaks out. So these zippers are a form of market deciding where it wants to go, and then finally when it gathers all that energy, it tries to break out, comes back down to check into that zipper, and finally closes just near, almost like 10 points, 11 points lower than the highs of the day. So overall, still the bullish scenario is on, and our short term indicators have yet not given up. They are in buy mode. So till they are in buy mode, we don't want to attempt to carry any shorts home. Now let's see what can be the likely scenario for today. So again, the same thing. If we open above this high, so uh, the reason for the hypothesis, taking into consideration the current auction, is that that is the likely scenario in the best case possible. In a very orderly auction, it tends to complete that auction in a particular way. So we consider that first, and then depending on the open, we decide what can be the other scenarios. Now, suppose if it opens here, then pushes into the 8465 zone, so would push above the high of the previous week, find sellers there, push back down into the range. If it gets accepted into the range, if the sellers can hold on, then push through this and test the 8415 kind of zone, try to push back up into the highest volume generated today, and then again, if it finds these sellers which have come are able to hold it, then finally push back down to the lows of yesterday. Now, what is making me doubtful is that there is a nice HVN here, which we have been considering since a few days, and today there was a bit of failure below that, but I would still want to see that time wise and range wise there is one nice balance here. So till this is holding up, the short term trend stays up. So in case, like, this is a programmed indicator, and at times what happens is the auction pushes through this, and these zones are like very near to that. So what will happen is it will try to come into this zone to ascertain that it doesn't have any acceptance lower and wants to again push back up. So that is the reason that such zones are important even for short term reversals. Now, the first scenario, what we discussed, is that it pushes down in this way. If it finds buyers even above 8465, then again start moving up towards the 8490 zone. So that is the likely scenario for the first, if it opens out of the range. In case it opens flat, then maybe push towards the high, fail, come back, rotate in this for a while. Let me clear this. So if it opens in range, push back near the highs or even above the high, fail, come back and test the HVN, and then decide to make its move higher. In case it fails here, then again the same thing, the first which we discussed, the first scenario will come into play. Go into this, again try to push back and then make its way lower. So both the scenarios are open in any case, whether it's a gap up open or a flat open. Now suppose if it opens gap down into this range, a minor gap down, then we'll start considering this scenario, that it pushes down, checks back the open revisit and pushes down, or it checks up, does a open revisit and then again pushes up. So in both the cases, whether it's open outside of the range or inside the range, we'll decide as per, we'll take either of these paths accordingly as per the open. Now let's have a look at Bank Nifty. Also, there is a poor high in Nifty, which is like a sign of the auction getting exhausted. But it's not necessary that poor highs need a repair. It is also a sign of auction getting exhausted. So depending on where the range develops and what it does, we'll decide whether those poor lows or poor highs will get repaired or not. Now coming to Bank Nifty, again a very clean open above the value of previous 2 days, tries to push through the point of control, does not find anything, and inside bar in B period, but finally C period breaks out, D period comes back into the IB, does not find anything, starts a short covering. The market's current business was hitting the stop losses of the shorts into this zone. So this 19,000 psychological level was not hitting, and when it hits that, there will be stop losses piled up above that. So what happens is it tries to take away those stops, tries to create a balance there, and if the shorts are piling up, again push through them, taking all the stops, and again go and establish a higher balance. So here it was getting halted at the highs, multiple highs in different brackets. So again poor highs, but also a sign of exhaustion. Now it has already gone above two references. One we were expecting 19050 and another was 19110. So now it is trading above that. In case it doesn't find acceptance here, then it might start going down. Any chances of repair of this elongated profiles would be below the point of control of this 2-day composite balance. Let's have a look at the 1-minute chart. Now here open creates a balance. This is a balance which was being formed in the first 1 hour and then finally breaks. So what happens is the first attempt to push through the highs has failed, and the second attempt, see if you can see this, with a huge push above the initial balance high, and that created kind of the background for the entire auction. When this is happening and this is not retracing back, it is holding up this balance. What happens is it gathers all the momentum to carry its next leg up. So here if you can see a channeled move, yesterday we were looking at this channel and we were thinking that this will continue. So this has continued a bit out of the channel of the previous day, if we consider like that. But again another channel is developing. So if we see this, a fresh channel is developing. So we would look at this, that this channel breaks on the lower side and enters this old channel would be a sign that it is getting tired. Let's see the 15-minute chart. Nice indecision, huge tails on either side. Now very emotional behavior, and then a nice balance here. Now not much sellers got stuck at the lows, but here buyers getting stuck into this range and finally taken out. And if you see when it hits these highs, you see guys running to buy, and finally the market has settled into that range. It has also pushed the point of control higher because a lot of congestion in the higher range, but a very thin profile on the volume, and all the volume getting concentrated in the upper range. So this would be important level for today. We would like to check if it pushes below 19,050 again, then we would see what it wants to do, because that is the lower balance. We need to consider one micro balance lower. Now let's have a look at the rotations, how the rotations played out. So very weird impulse like this. This should not have retraced back, but what happened is it fell back below the opening swing low, and then a nice impulse. Now this impulse is a failure again because there is a reverse impulse here. Uh, Going into the day mid would push it back lower and continue its way down. But if you can see, this is the pivot point of previous day, and it's holding. The sellers coming down here into this area finally got screwed when this balance is a sign that the market wants to accept higher prices. So when this balance is happening, and if you see a impulse, then that impulse is a buying opportunity for a continuation impulse. And finally, impulse down rejected, and created a balance in the higher zone, creating all the volume into that zone. So a lot of activity at near the highs of the day. Need to watch that out carefully, what it does today. Now let's see the likely scenario that can play out. Expecting open somewhere into this higher range. So suppose if it opens into this higher range, then push back up above the highs, check back this and continue its move up towards, I will just show you the micro composites level we have. So above that there is this thick zone. Now I have not plotted the value for that because there is this thick zone and a very channeled move. So not a balance because it's like pushing down lower. There is just a minor balance here, but for that, this much is this VL would be the point of control of this micro balance. So I have not plotted a balance here. Once we start trading into this range, I would like to plot the fresh balance. But till then, this HVN at this is a composite of the entire data, and that HVN of 19304. So 290 to 19310 would be a nice zone to see what the auction does. And also a very nice LVN here at 19195. 196 is marked, but can be like it's bank nifty, so need to like give a broader leeway both the sides, around like 10 points. So expected to make its way there into that 19 290 300 kind of zone if it accepts higher. In case it doesn't want to accept higher, then fail through this and push back down into this zone where it had found acceptance. So push back into the 19030 kind of zone, which is day mid also, as well as this acceptance zone, and then try to push up, create value, and finally push down into the lower balance. This is the lower balance, so it can find acceptance finally here if it starts going lower. Suppose if it opens gap up, then we'll consider this. We'll consider from this point the same scenario. Might do, not necessary. It will push in one go. Might do like push to 180, 200, and then again pull back down and then push up. And on the lower side, the scenario stays the same. Opening anywhere. Suppose if it opens into this zone, then we'll carry on with this. And in case it goes up and touches this, then again the same thing, either does this and goes up or fails and comes back into this. So the scenario stays the same. It's just that we are just marking the important levels where the auction might react. So That's it, I think, for today. And thanks for watching, and we'll catch you all tomorrow.